Testing. It seems like everything is working fine. Right? Okay, hi everyone. Welcome to today's live analysis session brought to you by IC. We're gonna do again a live analysis session. Today's the 4th of February. We're basically going to go on the charts. I'm going to pull out the live charts trading view and I'm going to show you how I would usually do my analysis based on the cheat sheet checklist that I have on hand right now. Okay, so before I start, I just need you guys to let me know that everything is working. If you can hear me, the screen is clear, you can hear my voice, or you can see me. Okay, thank you, Forex guys. Cool, okay, let's continue. Yeah, so before I actually start with today's webinar, we need to go through the disclaimer. So the disclaimer is really long, but anything that I share in this webinar today should not be construed as any kind of investment advice, financial advice, or any form of signal to buy or sell. Okay, I am going to go on the live charts and I am going to show you how I do my analysis, but please do not copy my trades. Please do not take it as a signal to get in. Okay, I'm basically just showing you how I would usually do my analysis. It may not necessarily be accurate analysis or high probability. Okay, on top of that, a risk warning: trading Forex and CFDs, especially if you are trading on margin, carries significant risk and is not suitable for all investors. So please be cautious. Okay, I'm gonna have to stay here for a minute or two so you guys can actually read through the disclaimer. But yeah, it's just a reminder that this webinar is purely educational and nothing else. Okay, cool. I think you guys should be done with the disclaimer. I'm just gonna move on to the next part, which is introducing your host. Okay, hi everyone. For those who don't already know me, my name is Cassandra. Hello. You can call me Cass. I am an investment analyst and a prop trader from Singapore. Okay, so I'm from a research firm called Everest Fortune Group. We have been recognized as the finalist for the best forex and the best equity research for multiple years running. So what we do is a lot of back testing, forecasting, a lot of studying where the charts is going, studying the charts and basically understanding where the markets are going. On top of that, I am a prop trader. So for those who don't know what prop trading means, it means that I have been funded by multiple companies to trade their funds. How did I get this funding? I had to pass their tests. So their tests required me to do 10% profit within the month. Doing 10% profit is a I wouldn't say easy, but it's something that I do consistently. And how do I do that? By combining technical analysis and fundamental analysis to get high probability setups. So today we're going to do a live analysis session. I'm basically going to show you how I combine technical analysis onto the charts to get these high probability setups. And to make it even more high probability, you can combine fundamental analysis, but we're not going to do that today because we don't really have time and we're going to focus on TA today. Okay, so I'm going to show you guys the cheat sheet. Oh yes, if you guys have any questions, just ask me in the chat box and I'll try my best to answer you. It doesn't, as long as it's trading related, I'll try my best to answer you, because as long as you're here and you're facing any challenges, let me know. Hi UK Gamer. Okay, so our agenda for today is to go through the cheat sheet checklist. This is the most important part of this entire webinar, is to apply whatever is on the cheat sheet checklist onto the charts so that I can come up with the analysis. Okay, I'm basically showing you how I would do it. It is not the same technique that every trader would use, but this is what I've been using, and this is what has been getting me high probability setups and has been helping me become profitable. Okay, so on top of that, we're going to look at key approaches when we go onto the live charts. Okay, let's move on. Okay, so this is the cheat sheet checklist that I'm talking about. If you don't already have a photo, you guys can take a screenshot right now. Okay, the most important part is this 3. Hi Jamilu, welcome. Okay, hi everyone. I see a lot of people, I see more and more people joining. So we're still in the introduction phase. If you guys, for those who are late, it'll be just nice. We'll be starting the analysis then. Okay, so I am a trend trader. That means that I need to know the direction of where the markets are going, whether it's an uptrend or a downtrend. If price is going up, that means I am entering for a buy. If price is going down, I'm going to be entering for a sell. Okay, it's that simple. Because as a trend trader, you're basically following the waves and you do not want to go against the waves. Okay, so if price is going up, you're looking for buy entries. If price is going down, you're looking for sell entries. It's that simple. Okay, so how do I look for direction? I'm basically using a trend line or a channel. So for a trend line, we're using 3. I need to look for 3 significant touches. Whether it's going on an uptrend or downtrend, it has to have 3 significant touches. If I cannot find a trend line, then I will find a channel. So a channel, you will need 4 touches, 2 on the top and 2 at the bottom, meaning 2 at the resistance area and 2 at the support area. So once that is done, I kind of have a rough idea where price is going. I now need to look for my entry, my stop loss, and my take profit. Entry, stop loss, and my take profit. Okay, how do I do that? I look for horizontal levels. That means pullbacks, overlaps, significant swing highs and swing lows, and on top of that, Fibonacci levels. Okay, so I'm basically looking for Fibonacci levels that lines up exactly where these horizontal levels are, or where there is a cluster of Fibonacci levels. That means that there is confluence, and I can then look for an entry from there. Okay, so once that is done, I would already have kind of like a rough idea what I'm going to do with my setup. I would already kind of have an entry, a stop loss, and a take profit. So I would already know if I'm going in for a reversal or a breakout, because I already have a general idea of what I'm doing. Okay, so then now that I know what the idea is or where I'm going. Okay, guys, before we continue, can you guys like this video and share this video? Okay. Yeah, so once that is done, I'm going to look for supporting technical indicators to help me make my decision making higher probability. Okay, so I'm basically looking for chart patterns. So it can be wedges, triangles, double tops, double bottoms. Your teaching changed my trading. Thank you, madam. Thank you. Oh, thanks for taking the time to join my webinar. Okay, so wedges, triangles, double tops, double bottom, triple tops, triple bottom. Let me see. Head and shoulder, teacup patterns, inverse head and shoulder. You're basically looking for any kind of chart patterns that will help your decision making be more accurate. Okay, because the whole point of trading is to be, you're just collecting data and then using the data that you have collected to make a decision, right? So everything in trading is logical. There's nothing about trading that is emotional, right? So everything is logical. We are collecting data and we're just making a decision based on the data we have collected. So the data that we have collected, the more data we collect that is pointing to the same direction, meaning that pointing to a buy or a sell, the higher probability your setup is going to be, right? That's very simple to understand. Okay, so once that is done, I'm going to pull out the moving average. So the settings being 250 moving average. I'm basically looking to see what the moving average is saying in terms of direction. Okay, so once I have a general idea of where price is going with the moving average, it will give me a bit more confidence with my setup. If I cannot find any death or golden crosses, I will look for natural moving averages. Sometimes they don't happen, and that's okay. You don't need to force it, right? You don't need to force the charts. Okay, so the last indicator that I'm going to pull out is stochastics and RSI. For stochastics and RSI, I'm basically looking for bounces and reactions or divergences. Divergence means that if the price is going up on the charts and on the oscillator, on the indicator, it is going down, it means that the oscillator is trying to tell you that there is a possible trend reversal. Okay, all good? Okay, so the last part will be looking for correlations, and then we're basically done with the entire technical analysis part and basically looking for a setup. Okay, how does correlation work? So for example, if I am trading EUR USD, and I'm buying EUR USD, that means I want the euro to go up in price and I want the US dollars to drop down in price, right? Not that I want, but this is what the charts are showing me. So technically, DXY should also be dropping in price. Why DXY? Because DXY is the US dollar index chart. Okay, DXY will show you the movement of the US dollar. So if you want to buy the EUR USD, that means DXY should be dropping in price. And that's how you use correlations to get higher probability setups. Another example is using currency to commodity. So a very good example of this is Canadian dollars and oil. So Canada is a very big producer of oil. Therefore, their currency is quite tied to the prices of oil. Usually, if the prices of oil goes up, the prices of Canadian dollars increase as well. If the prices of oil drops, usually Canadian dollars will drop as well. Why? Because the currency is tied to the commodity to a certain degree. It's the same as the Australian dollars and iron ore, or New Zealand dollars and dairy. Okay, because these countries are commodity driven countries. Okay, so the next one would be using currency against currency, meaning a very good example of this is the Australian dollars and the New Zealand dollars. If Australian dollars is moving up in price, usually New Zealand dollars will move up in price as well. If Australian dollars is moving down in price, usually the New Zealand dollars would move down in price as well. Okay, that's that. We're done with basically the whole cheat sheet. I'm gonna erase everything so you guys can take a screenshot. Yeah, I'm gonna stay here for 5 seconds. So 5, 4, 3, 2, 1. Okay, we're gonna move on. So thanks for sitting through the introduction. I'm gonna pull out TradingView and then we can go through analysis. If you guys have a particular chart you want me to look at, we can look at that together. But otherwise, I'm just gonna look at my usual stuff, which is gold, Ethereum, and EUR USD. Okay, let's look at, oh, did I say buy? Did not work out. Nice. Ethereum is going to hell. Let's redo the analysis. Okay, give me a moment. Okay, so I'm very transparent with you guys. Whatever I did last week, I'm basically going to show you what I did last week. So last week we did the analysis on Ethereum. Obviously, I called for a buy because I didn't think that price was going to drop and break this support area. But I mean, obviously it broke. So we're gonna have to reanalyze this again. The next chart I want to look at is gold. We can see gold rallying. The last time I checked, gold was at like $5,000. It is at $5,000 again. We're gonna look at that in a bit. And the last one will be EUR/USD. Okay, I don't know what happened to my analysis for EUR/USD, but I remember last week I did call for a buy for EUR/USD. The question is, did I call for a buy from here? I don't know. I don't think so either. I probably called for a buy a bit higher, but this looks like a better entry anyways. But yeah, we will see what we can do with these charts. Starting with Ethereum. Okay, let's see where this cryptocurrency wants to go. If you guys can hear background noise, let me know, okay? So that I can go shut the door. I just realized the door isn't shut all the way, but if not, I'm just gonna continue. I mean, I still think Ethereum is on an uptrend because, first of all, I've done my technical Elliott wave analysis on it, and it should still be on an uptrend. It's just that it's probably pulling back right now. On the weekly, you can see it. Okay, if this is a valid channel, right? If this is a valid channel, technically price is going to pull down to like the bottom of this channel and then kind of reverse somewhere around here, right? But this, we cannot assume this is a valid channel because we're assuming it's going to form the channel, which I think there's a high possibility it might form the channel, but then again, the channel could shape any different way it wants to, right? It could do this. It could do this, right? So depending on how you draw the channel, that looks like there is room for Ethereum to drop. But okay, what I'm gonna do now is pull out horizontal levels because we cannot just assume that price is going to create that channel. Oh my gosh, my leg cramp. Give me a moment. I've been sitting on this chair for too long. Okay, where was I? Okay, so I don't think it's fair to assume this channel is going to happen. So what I'm gonna do, since there's no channel and there is no trend line, I mean, there might be a trend line. Let me check. I mean, that looks like a valid trend line, honestly. Give me a moment. Okay, so we're going back to the cheat sheet, and remember I said to identify a swing high or swing low, you are going to use either a channel or a trend line. I cannot use the channel because I cannot assume that price is going to form that channel. So I'm going to use the trend line, and I need 3 significant touches. So if we look at this chart, we can see that price did 1, 2, 3 significant touch. Is this a valid trend line? This is actually a valid ascending trend line. That means that the next time price should be coming to touch the trend line will be somewhere around this line, which is the 1,700. Whoa, that's really low. I hope I have cash by then to enter Ethereum. Well, if it drops to 1,007, I might actually go in, like, bulk of it. If I didn't update you guys, I got out of Ethereum at 4,300. I got out of all of my Ethereum at 4,300. seeing that it has dropped like about 100%, 50%. It has dropped 50% since that time. I'm waiting for it to drop more, and then I'm gonna re-enter again. Okay, so that's the weekly. Let's go down to small time frames, because we kind of want to know where Ethereum is going to stop, right? And we want it to stop close to this trend line so that everything is aligned. Okay. I'm gonna pull out some Fibonacci levels to see what is the nearest. Okay, 78. There's no other level. So the 5 levels that we look at are usually 23.6, 38.2, 50%, 61.8, and 78.6. Price is at 78.6 right now, and it's also at a key horizontal level. Okay, it is at a key horizontal level. Why do I say it's a key horizontal level? If you guys look closely, you can see our price came here once. I guess this is counted twice, 3 times, 4 times, 5 times, 6 times, and now we are at the 7th time. Is price going to reverse right now? I have no idea. Let's do the technical analysis so that we kind of have a rough idea. I wish it doesn't reverse right now. I wish it drops more to like this area. I hope it drops more to like somewhere closer to the trend line, because I want to re-enter Ethereum, and this does not look like it'll be good if it can drop to 1,007, but let's see if that's even possible. Okay, you can see price kind of rejecting already. There's already some rejection going on. We're at a key level right now. Is price gonna hold in this key level, or is it gonna go down lower? I mean, emotionally, I personally want it to go down lower, but I think it's looking like it's not going to go down lower. Yeah, we are at a key level right now. Even on the daily, it's so obvious. 1, 2, 3, 4, and then we're now at the 5th time. I think there's going to be a reaction here. Okay, I think there's going to be a bounce here. I would love to see price go down lower, but I don't think that's going to happen. I think this is probably going to be a good buy area. Okay, give me a sec. Hmm. Wrong one. Nope. Okay. I think if we're following like all the textbook stuff, it looks like we are at a buy entry, honestly. But there, okay, it's okay. We're gonna pull out the other stuff. Okay, so I've got my horizontal level. I've got my entry, but I'm not going to put, please, which side do you use to calculate lot size for Ethereum? I actually manually calculate my lot size myself. Yeah, so um I have like a $200,000 account that I trade with Ethereum. Okay, so I'm only willing to risk 1% every single time. That means I'm only willing to lose $2,000 each trade. Okay, so then I will actually manually, and sometimes I even ask ChatGPT. I ask ChatGPT actually if my entry is at, so I will give all the details, is if my entry is at 2.7, for example, my stop loss is at 2.8, for example, and my take profit is at 2.3, then what is the lot size that I can use if I'm only willing to lose 1% of a $200,000 account? Okay. Yeah, so I personally manually count that, and I do it using ChatGPT. If there's a site that you use to calculate, TradingView does it automatically for you. Oh, I had no idea. Yeah, you guys can try. I mean, Peter, you can try TradingView, but I mean, I personally have never used TradingView before. If I don't, did it work for you, Jason? Okay, so I'm gonna go back to this. Sorry, we were looking at the charts. Just need to add your balance when you create an order. Okay, yeah. Maybe try the one on TradingView, but I mean, I personally manually, okay, despite having like, sorry, trading as my profession, I am actually very bad at all this like computer stuff, and like I consider myself a boomer when it comes to this. So yes, if there's a better way to do it, definitely share in the chat box so that you guys can help each other out. Okay, so I don't see any chart patterns. Do you guys see any chart patterns? I mean, double bottom. Is this really a double bottom though? It's not really, right? If the double bottom forms, see double bottom. So the double bottom, it has to make like a W kind of shape, and then it needs to break like this top for it to be valid. That means your entry will only be here. Okay. I mean, I guess we can put that there as a reference. Okay, so I'm gonna put this here for now, and then we can decide. I'm gonna decide later what I'm gonna do with whatever information we have collected. Okay, next, any death or golden crosses. Let's see. 50 and 200 moving average. Okay, the 50 and the 200 moving average is showing that price is going down. Okay, so the 50 is the 50 moving average, and the white is the 200 moving average. Okay, it's very simple how you use this moving average, death or golden cross. If I pull back, you see here, the green was below the white, and you can see price just shooting down like very beautifully in one very nice movement. But then in this part, you see it crossing the white and then crossing back and crossing the white and whatnot. Okay, this part, it doesn't work because moving average, okay, death and golden crosses, they don't work for sideways market. So we can see that price is going sideways here, therefore it's not going to work. But then price has started to trend again. You can see that price has started to trend again, right? It did a dip. Okay, so it has started to trend again. So this should be giving us accurate information. So right now, we have got a death cross. Wait, death cross is when it's at the bottom, right? Yeah, so death cross meaning the 50 moving average is moving below the 200 moving average, which is signaling a form of downtrend, okay, or bearish momentum. Okay, we're not going to use this because we've already got the death cross. Okay, the next one will be the stochastics. Give me a moment to pull that out. Stochastics and RSI. 21.5. The settings that I usually use is 21.5 and 3. You can use whatever works for you. This is what works for me. Okay. You know what, guys? I'm actually more inclined to believe that it's going to be a breakout to the downside. Okay, I think price is going to go lower rather than higher. So what I'm gonna do now is give a safe option for myself. Okay, so if this in fact really is a double bottom, right? If this is a double bottom, it needs to break this area before I can go higher. Okay, so this is the last confirmation. Therefore, this is going to be the sell entry, the buy entry. When it breaks up above, that means the strategy that I'm going for is not a reversal. I'm going for a breakout. Okay, because I need the breakout to confirm. I need the breakout to confirm that we are in fact going in the right direction. Okay, so I needed to break up above this again one more time for me to confirm that it's in the right direction. Right now, it's too early to tell, because if it breaks down on the lower side, it means that it's going to be a price continuation. And why am I even anticipating that price is going to go lower? Okay, first of all, if we go back to that weekly, we can see that price has not reached that resistance. The support. So technically, there is still room for price to move down. If we are purely talking about a technical analysis point of view, there is still room for price to move down before it reaches a major resistance, which is right here, which is at the 1700 area. Okay. Furthermore, the moving average is actually showing that it's a downtrend. So right now we have contradicting information, that it's not all pointing in one direction. A high probability setup is when everything is pointing in the same direction and everything is saying that it is a buy. But right now we've got some information that is saying it's a sell, and then some information that is suggesting, it's not even a confirmation, it's just suggesting that it's a buy. Therefore, I'm actually a bit more biased that a breakout is going to happen on the downside. So what's going to happen? This is going to be my final analysis, and I'm going to tell you exactly what I'm going to do if I do enter this trade. This is going to be my sell entry in the event it breaks. Okay, there's a death cross. Okay, if price breaks in either direction, then we'll consider to enter in that direction, meaning buy or sell, meaning, I don't know if that makes sense, but yeah. Okay, so I need a break on either side for me to decide where I'm gonna go next. I'm actually more biased that it's going to be a sell than a buy. Okay, but we shall see. Maybe price just reverses right now. We never know. Okay, so I think I'm a bit more biased. If I have to give like maybe 60% sell and 40% is buy. Okay, so whatever happens, this is going to be either my buy entry or my sell entry. I'm going to change this to sell. My stop loss is going to be in the middle of both of this, okay? So wherever the price goes, this is going to be my stop loss. So if this is my entry for the sell, this is my stop loss. This is my entry for the buy. This is my stop loss. Okay, because I'm not too confident that it is a buy anyways, okay? This is going to be my take profit for the buy, which is basically just the next level. Okay, it is just the next horizontal level here, which is this overlap here, meaning this swing low, which will become a resistance if price pulls back. Okay, for the sell, my take profit, I'm gonna get rid of this. This is so messy, man. My take profit is going to be, wait for it, here. Okay, just above this, where this last swing high was, okay, where that last movement reaction was. Why am I constantly looking for those like swing high, swing lows overlap area? Because price is attracted to where it last stopped. Okay, so if we look at structure here, you can see that there was a bit of reaction. There was like a lot of stopping, a lot of rejection happening in this area, and then once more here. Okay, this is more likely if price were to come back here, that's going to happen again. So either way, this is one of my entry, this is one of my stop loss. Let me see. So if it's a short position, this is a 1 to 3.4 setup. Not too bad, not too shabby. And this is my 1 to 3 setup. Okay, the better stop loss, I mean, if I'm being very honest, is, yeah, it just could be somewhere in this box, but a bit lower or a bit higher. Okay, so I'm going to give my conclusion of what I think of this setup. I think this is a mid probability setup. Is it risky? Yes, it is. Will I take it? No, I won't take it. Okay, so what I want to see happen is whether price is a buy or a sell, for me at least. That's why I say not to copy me blindly, because everyone has their own style of doing whatever. Okay, why am I not going to get in on this trade? Because I want to get in for a buy for Ethereum. Okay, I only want to get in for a buy for Ethereum. So even if this ends up being a sell, right? Even if this ends up being a sell, I'm gonna wait for price to reach the take profit. Only when it reaches the take profit here, that's when I'm gonna enter for a buy. So I'm okay to skip this trade because I think it's a risky setup. It is a risky setup, and that's why I'm going to skip it and only wait for price to reach take profit, and that's where I re-enter for a buy. Okay, but that's my own personal preference of doing things, because I like, look at this. Ethereum is clearly moving in an uptrend. I mean, I've done many analysis on Ethereum. It doesn't even have to be like, we're not even talking like about the cheat sheet, right? I also use Elliott Wave to do analysis on Ethereum, and I am fairly confident or fairly convinced that Ethereum is moving in an uptrend on the long term. Okay, so if it is going to move an uptrend or long term, I want to try to catch it at the bottom or near bottom to get in for the buy. So yes, you can still trade before that happens. You can still trade the smaller time frames before that happens, but I personally do not want to do that. Okay. Okay, so let's move on to the next trade, which is gold. Gold is always moving up. It doesn't go anywhere other than up. Okay, so you know, I have this saying that if you just buy gold and you forget about it, you are going to wake up one day and you would have made money. Because gold is only moving in one direction, at least for the last, like, how long are we talking about? For the last 25 years, since they started tracking gold, gold has only been moving up. Okay, so nothing moves up in one direction. Nobody shoots up like that in one direction. Price is constantly moving up, but in a zigzag pattern. So even though gold is just basically moving up, because it's moving in a zigzag pattern, you can now look for all the buy entries here. buy. Every time it pulls back, that is your opportunity to get in for a buy. Okay, that is your opportunity to get in for a buy. Does that mean you cannot short gold at all? Yes, of course you can short gold if you are trading on a small time frame. If you are a scalper, you are a day trader, yes, you can always play within the zigzag. But I personally, whatever I'm sharing with you guys, my own experience, I am personally a swing trader. I am a day to swing trader. Therefore, my trades are a bit more longer term. It usually lasts about 2 days to a week. So I'm not very concerned of the small movements. I'm more concerned of the long-term movements. So on the long term, we all know gold is always just moving up. We just need to catch the zigzags. Okay? So it's always moving in a zigzag. I want to know where is it going to stop. Here. Where do I enter for a buy when it pulls back? Okay, so it just recently pulled back 1, 2, 3 on Monday. It pulled back on Monday and it's already going up. We may have missed the pullback. The lowest low from the pullback, but that's okay. We don't have to catch the lowest low. We can look at different time frames. So before that happens, I just want to see where did it pull back to? What level did it pull back to? Looks like the 78. Nope, 61.8. Okay, so price pulled back to the 61.8. Exactly, this would have been, let me see. Yeah, even if I had did this analysis on Monday, I would have gotten the direction correct, but I would have been stopped out because this wick is huge. That is the problem. This is the problem with gold. Gold is good. It's nice to trade gold, but once in a while you have this super long wicks. Okay, this wick, the start of this wick is 4665 and the end of it is 4412. That's like $50 difference. That's like 50 points, $50 difference. So no, if you don't have a huge stop loss, you are definitely going to get stopped out. And if I had entered this, if I had seen this on Monday and I did this analysis and I said, okay, the entry is going to be at the 61.8, yeah, I'm going to be correct for the direction, but I'm going to get stopped out because you guys know I like to put my stop loss here, right? I like to play really tight stop loss. I would have been wigged out for no good reason. Okay, so that's just the characteristics of gold, and that's okay. You cannot catch every winning trade. You only can try your best to catch as many as you can. Okay, so now that that has happened, I honestly think price is just gonna go up from here. Okay, let's find an entry for gold. I don't think. Okay, so one thing I've noticed about gold is that it doesn't tend to do a movement twice. Okay, it does a zigzag pattern, right? So if it has pulled back one time, that's it, it's gonna move up. Pull back one time, that's it, it's gonna move up. That's what I noticed with gold. So we can see that gold already pulled back that one time. I don't think it's gonna do this. It's gonna pull back a second time before it moves up. No, that's not how gold works. I've been following gold for many, many years and I've rarely seen gold come back to the same price, the exact same price, especially when it's a big deep twice. Okay, so I think this is done. I think it's gonna move up from here. The question is, before it moves up, it also needs to move in a zigzag pattern, right? So where is it gonna pull back to? Let's see what our hopeful buy entry is. Okay, for starters, I think if it breaks out here, this is definitely one entry that you can consider. I would consider getting in on buy entry. Okay, that means we're going back to the cheat sheet, you're going in for a breakout, right? You're looking for a breakout. Okay, but in the event it doesn't just break out from here and it gives you a little chance of pulling back, let's identify where the possible pullback is going to be. I am My direction for gold is clear. It's definitely a buy. The question is, where do I enter for a buy? Okay, there's another level here. I'm basically identifying horizontal levels. That's the problem, right? Because gold has been just moving up. It's just been moving up, and it's making all-time highs. There's no other levels for me to reference. If I pull to the left, there's no other levels for me to reference or take information from. So it's very hard to like guess where it's gonna pull back to, because it could be this swing high, it could be this swing high, it could be this swing high, it could be here, it could be here, it could be here, it could be anywhere. But because it's not giving too much information. Okay, so if I had to really pick one, I guess this is the closest one that I can find. Why? Because the first one is this is little movement here, and then this little movement here. Okay, it's not very convincing, to be honest. I'm not gonna lie, it's not convincing. Okay, this looks better. This looks a lot better. Yeah, you can see how price kind of came here, touched, and then reversed. It broke out, came back to touch this level here, and then moved back up. So I guess this level here is something that's the closest level that I can find that has any kind of significance. I don't really see any other level that has any kind of significance. Yeah, on top of that, you can see price coming here and then kind of like hovering sideways, kind of rejecting this area. Okay, if price were to pull back, I'm happy with this actually. If price were to pull back, I think it's going to pull back. This is as far as it will pull back and then continue up. If it doesn't pull back, that means that it's going to break out and continue. So the direction is clear. Direction for gold is clear. I'm definitely biased that it's going in an uptrend. The question now is it where is it going to go on the uptrend to? Where do I enter for my buy? That is the biggest question I need to ask myself. I know it's going up, but where do I enter for the buy? Okay, so I've got an idea. The first one will be a reversal and the second one will be a breakout. Okay, so the reversal, if it happens, I think as much as I'd like it to pull back more, I think it's only going to pull back up to here, which is 4,900 area. And then from here, we'll kind of see a reaction. So this will be the take profit. If it does a breakout, means you can aim for the next high already. Okay. Okay, let me go back to the charts to see. We are still on the weekly, daily. Yeah. Yeah, I'm happy with this. Okay, which one would be a better entry? If you guys have been following me especially those who have been following me for a long time, you know that I am a reversal trader. I love it when price pulls back and I catch that pullback exactly on the dot and then it continues up. So I've done that many times. Not last week. I mean, last week the trades didn't really work out, but I think the week before, or was it the week before that, we did gold and gold reversed exactly on the dot as where I thought it was gonna reverse. And yeah, that's how I like to play my trades. I hate playing breakouts. So in the event it pulls back, I will consider getting in a trade. Okay, I personally will if it's a pullback. Okay, but if it does a breakout instead, I'm not getting in a trade. Okay, that's why I always tell people are always telling me like, hey Cass, if you are free, can you teach me like one-on-one, like yada yada yada, how do I trade and whatnot. I can show you my style of trading, but there is no way for you to copy it fully. Why? Because trading is such a personal journey. What is right for me may not be right for you. What is right for you may not be right for me. So some traders are going to be like looking at this and be like, hey, why aren't you playing the breakout? You can play the breakout if you want to play the breakout. I just personally do not like playing the breakout. So it's based on my own personality that I don't like playing the breakouts, because based on past experiences, I have been burned many times from breakouts. So I have made a rule for myself to try to avoid breakouts as much as possible. But I have seen a lot of success when I play reversals. Therefore, naturally, it's obvious that I would like to play reversals more than the breakout. So when I see a reversal, I don't doubt myself as much and I get in on that reversal trade. But when it is a breakout, I'm just like, oh, okay, I hope I don't get stopped up. Okay, so I personally will get in only if it's a reversal. If it's a breakout, I will not get in. Okay, so we will find out in a week what happens, but I think there is a good chance it's just gonna break out. Okay, but I don't know, we shall see. Okay, so let's move on to the next one, which is EUR USD. Okay, so far, my honest opinion, sorry, let's go back to ETH USD. I think this is going down. I think, but I'm not going in for the sell. I am not going in for the sell. Okay, so how do I become profitable? Trading only once a week, sometimes twice a week, sometimes 0 times a week. I'm very selective with my trades. I do tons of analysis, but I only get into those that makes a lot of sense to me. Okay, so I think Ethereum is going to drop down to this green level here, but I am still not going to enter for a sell. Rather, I'm going to wait for Ethereum to drop down to this green level, and then I'm going to enter for a buy. Why? Because based on my portfolio, I am buying Ethereum for a long term. Okay, I am buying Ethereum to hold. So if we look at the bigger time frames, we can see Ethereum moving on a uptrend. Hi, Trading Mask, an uptrend. So I want to buy Ethereum as low as I can get in, and then I want to hold it for long. Okay, so I'm not really trading Ethereum. That's why for me, I'm totally going to miss this setup, even if it is a sell. Even if this sell works out, I'm going to skip this. But if you are a day trader, if you are a scalper, definitely something that can be considered, but I personally would not. Gold, I will only get in if it pulls back. If it breaks out, I will not get in. Again, trading is a very personal journey. I only do what's comfortable for me and what suits my personality, and that I'm very selective with my trades, and playing a breakout does not suit my personality. Okay, so the next one would be EUR/USD. Let's see what's happening. Okay. So since the 23rd of June, now is February, for like US 30. Okay, I'm reluctant to look at US 30, but we can in a while. Why am I reluctant to look at US 30? US 30 is an index. It is very heavily driven by news. Okay, it is very heavily driven by data releases and news and whatnot. If I am doing a pure technical analysis, I would say US 30, I'm going to burn myself on US 30 because I'm doing pure analysis. So every time I take you guys for this live analysis sessions, I am doing pure technical analysis. That means we are not combining any news, we are not combining any fundamental analysis, we are not combining any CPI data, unemployment rate, any like whatever, okay? We're not combining any of that. It is 100% indicators, 100% trend lines, horizontal levels, Fibonacci levels, and it's not very accurate to do analysis that way on an index. Even for Forex, combining fundamentals will help a lot. It's just that we really don't have time to combine fundamentals in these webinars. These webinars are only 1 hour. If I combine fundamentals, we're only going to end up looking at one chart every time. Okay. Okay, so back to Ethereum. So for the last, I would say 6 months, price have had a hard time breaking this area. Okay, you can see price wicking. No, it wicks for sure. It wicks and goes above this area, but the body cannot close above it. So it's just been having a hard time breaking this, I would say 1.2 area. Okay, it's having a hard time breaking a 1.2 area. Is it gonna break today? Let's find out. Let's find out. Please, can you teach us your new trading strategy? Okay, I'm gonna have to do that the next week. So come back next week on the 11th. Okay, same time, 3:30 p.m. Singapore time. It's reached a resistance, man, but it has been in this resistance for a while now. It has been hovering at this resistance for the last 6 months. I think, I know not for a fact, but I have a very, very, very strong feeling if I put my stop loss here, chances are I'm not going to get stopped out. Because it is having a very hard time going above this area. Okay, so I think price actually wants to reverse. It wants to respect this trend line. It wants to respect the trend line, but at the same time, at this current point of time, especially the last 6 months, it didn't have enough momentum to push price down. Okay, because like I said, although I can trade Forex purely on technical analysis, if you combine it with news, you will know why EUR/USD is not pushing down yet, because the US dollar is dropping right now. So if I pull out the DXY chart, US dollar currency index, okay, this index charts the US dollars. If we look at the US dollar index chart, it is also going on a downtrend, right? It is having, it doesn't have momentum. And if you are following the news, you know that the US dollar is devaluing. Okay, so I think EUR/USD wants to respect this trend line. It's just that right now, at this current point of time, it doesn't have the momentum to push price down. I think eventually this will be a very beautiful, nice sell. But right now, is it a sell right now? I don't know. Let's see. Let me remove everything. Okay. I think for short term, for very, very short term, I can probably consider getting in for a very short sell. Is this going to be the sell that pushes price all the way down? I don't think so, but at least for now, Give me a sec, guys. I don't think the momentum is right. Okay. DXY needs to break this area as well. So DXY is also at a resistance. Okay, sorry, scratch that. I'm going for a buy. Okay. I still think USD on the long term is going to be a sell. Okay. I think honestly this was a very good entry to get in for a sell for a long term. I'm not even talking about short term. I mean like getting in here and then just shorting the EUR maybe all the way down. I mean holding for months. I think that was a really good entry, but I mean it's missed already. Okay, just on a very this is very hard. This is very hard because structurally things are not pointing in the same direction. Things are not pointing in the same direction. Okay. I cannot put the buy entry here because I don't think price is going to go down one more time. Okay. I don't think price is going to pull back one more time. It already came here once, pull back a second time, and then went back up. Okay, so I don't think price is going to pull back another time. What is the best? I think probably this. Hey, trading ma, sorry, I can't look at those today. I'm actually overshot. I've already overshot time. Okay, so this is the best that I can come up with for EUR/USD at this current point of time. Yes, this can be way tighter. I'm just giving a lot more breathing room. Okay, I'm just giving it a lot more breathing room. Okay. Yeah, I'm happy with this setup. I don't think it's a high probability setup. I think it's a mid probability. Out of everything that I showed you guys today, I think this is an okay trade. I'll probably get in at a very small lot size. This for sure if it pulls back. And this only when it pulls back. Okay, so that's all I have for you guys today. Thanks for staying all the way, guys. I will see you guys in a week, same time next week. So on the 11th at 3:30 Singapore time. Okay, bye guys. Take care. Happy trading. I hope you guys are profitable. Bye.